Welcome to this explainer. Today, we're unpacking the fundamentals of District 20's most talked about mega development, Thomson Reserve. We are going to cut right through the buzz and look at the hard data, focusing heavily on how that incredible Thomson line infrastructure impacts value and whether the entry price actually makes sense for your portfolio.
So let's just dive right into it and address the elephant in the room: premium entry pricing and long-term value. A lot of market watchers see a record-breaking land acquisition and immediately assume, well, the resulting launch is going to be way overpriced, right? They think it squeezes out any potential for future capital appreciation. But as we know in real estate, that headline number never tells the whole story. It's really about what that premium is actually buying you.
Here is how we're going to structure our analysis today. 1. The Thomson line advantage. 2. Thomson Reserve location edge. 3. Schools and lifestyle ecosystem. 4. The investment reality check. And 5. Next steps with Jet Li. Let's get into it.
Starting with Section 1, the Thomson line advantage and how it's transforming District 20.
We absolutely have to start with the undeniable macro value underpinning this entire development, the transformative transport infrastructure. Thomson Reserve sits practically at the doorstep of the Upper Thomson MRT station. When you're analyzing property along the Thomson East Coast line, having the station right there is essentially the holy grail. It provides incredibly seamless connectivity straight into Orchard and the CBD. And the data shows us that developments with this kind of immediate access see remarkably stable owner-occupier demand and highly robust rental pools.
But you know, it doesn't just stop with one train line. You've got a beautifully layered network here, which is what we like to call a connectivity stack. So beyond the TEL right at your doorstep, you've got the future Cross Island line coming to Bright Hill by 2030, plus the Circle line is accessible nearby. It is incredibly rare for a rest of Central Region, or RCR, mega launch to boast this kind of multi-line advantage. It really acts like a protective moat for property values, anchoring the development's worth even if the broader market takes a dip.
Moving on to Section 2, Thomson Reserve location edge. Let's look beyond the train lines.
For those of you who drive, the upcoming North-South corridor opening around 2027 is an absolute game-changer. It's going to act almost like a dedicated expressway, dropping off-peak drives to Orchard down to just 15 to 20 minutes, and you're hitting the CBD in maybe 25 to 30 minutes. This kind of massive physical infrastructure upgrade is a highly tangible catalyst for future capital appreciation.
And when we zoom into the site itself, we're looking at a pretty rare footprint. Sitting on a sprawling 5-hectare plot, this mega development is projected to yield over 1,200 residential units. Now, why does that matter to you? One word: scale. A project of this massive size allows the developer consortium to pack in an incredible array of full-suite condo facilities, while kind of counterintuitively keeping your monthly maintenance fees lower. Plus, a larger unit count means a higher volume of future resale transactions, which is absolutely essential for establishing strong upward price benchmarks over time.
All right, Section 3, Schools and Lifestyle Ecosystem, the family anchor. What's really interesting here is the powerful ecosystem that anchors long-term family demand. Being within a 1-kilometer radius of Atong School gives families a massive advantage for primary one registration. In Singapore, this school effect is a proven structural support for property values. Families will actively pay a premium and hold on to units much longer just to secure and maintain this proximity.
So the crucial point here is the lifestyle balance. It seamlessly blends the daily convenience of having Thomson Plaza directly opposite you with immediate access to some of Singapore's absolute best green spaces. You're sandwiched in a prime district surrounded by 5 major nature parks, including MacRitchie Reservoir and Lower Pierce. It's an incredibly sticky location for owner-occupiers. Once families move in here, they rarely ever want to leave.
Which brings us to Section 4, the investment reality check. Let's do an objective financial analysis.
We're pivoting now to a hard-nosed, objective look at the financial realities. Because let's be real, this is definitely not a cheap entry point. The genesis of this project was the landmark in-block sale of the former Thomson View, which closed at a staggering $810 million. That translates to roughly $1,178 per square foot per plot ratio. That establishes a significantly high break-even cost for the developers. They simply cannot and will not launch this at bargain basement prices. But hey, context is everything, right? What's really surprising in the data is that when you compare this to recent island-wide sales, this RCR site actually secured a lower land cost per square foot than several much newer suburban OCR sites like Chuan Grove or Badak Rise. So while the absolute price tag was huge, the relative cost for a site of this caliber is surprisingly defensible.
Looking at surrounding RCR launches, market watchers estimate Thomson Reserve's launch prices will logically sit in the mid to high 2000s PSF band, likely somewhere in the 2600 to 2900 range depending on the stack and unit type you're looking at. Now, if older benchmarks like Jadescape are currently transacting around 2296 PSF, Thomson Reserve is explicitly asking buyers to pay a premium. But that premium is for a brand new product, that 1 kilometer school advantage, and of course that unbeatable multi-line transport stack right at the Upper Thomson station we just talked about.
Because of this premium, this is explicitly not a quick, speculative sure-win flip. If you're just looking to buy and dump right after the seller's stamp duty window closes, well, this might not be the project for you. Instead, this is designed as a highly resilient, long-term hold. The true capital appreciation upside here relies on riding through at least one full property cycle and waiting for all that infrastructure maturity, like the North-South Corridor and the Bright Hill Interchange, over the next 10 to 15 years.
Finally, Section 5, Next Steps with Jet Li, and translating this data into a strategy. To figure out if this investment actually makes sense for you, you've got to translate these macro and micro facts into a personalized financial strategy. Your profitability with Thomson Reserve is going to depend entirely on a few highly specific factors. First, your exact entry price relative to competing stock. Second, your stack choice. Are you going to pay a massive premium for a reservoir view or find better value in an internal-facing unit? And third, securing an efficient layout during the early preview phases before developer prices get pushed up in subsequent releases. You need a rock-solid plan based on whether this is a pure investment for yield and growth or an own-stay play for your family.
And this is exactly where expert personalized modeling comes into play. Because profitability relies so heavily on specific unit layouts and entry prices, running your exact financial scenarios is absolutely crucial. For detailed data modeling on expected rental yields and realistic exit prices in the 2030s, call Jet Li for more details directly at 876-493-15. Seriously, don't walk into a mega launch of this scale without running the hard numbers first.
So, we've seen how the Thomson line transforms convenience and how the upcoming connectivity stack sets a completely new benchmark for this region. With these massive infrastructure completions on the horizon, it is time to ask, are you properly positioned to capture the coming capital appreciation in the central fringe market? Take the time to map out your long-term goals, do the math with a pro, and decide if this landmark site belongs in your portfolio.